Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. If you're a regular follower of this report, you'll know that I leave my lines on the chart each and every week so we can see how the forecast worked out. And last week I said I was leaving this target in place with this horizontal line as a role reversal support level. And as you can see, yesterday especially, we went right down to that target and bounced. Well, that's a support level. Now, interestingly enough, we bounced on lighter volume while these oscillators are starting to move up. What does that mean for next week? Well, look down below at the CCI down here. We are a hair away from crossing over that momentum line. And my general rule of thumb is that whenever the CCI crosses over the zero line or the momentum line, we generally head in the direction of the cross for 2 to 4 days. So for the next 2 days, I'm being conservative, the next 2 days at the minimum, I think we are going to move higher and retest this resistance up here. Now, once we get to that resistance point, we're going to have to see whether or not the markets sell off from that point. So we'll have to keep an eye on the volume. So again, for the forecast, I'm just going to put this right like that, put a target resistance here, and I'm going to keep that just like that. So I'll erase that line now that we've hit that target, and we'll keep that target for the upside number of 207.43. Again, that's for IWM. Now, if we look at the SPY, this is the S&P 500. Again, we've hit on all of my forecasts, by the way. All the downside targets were hit. We had this major bounce today on lower volume. Again, that doesn't mean, sell the house, sell the kids, and go buy more stocks. I'm just saying that we are expecting to see a rally up to these resistance points up here and then a possible pullback. So I'm even going to go so far on the SPY to put the pullback point right there. There's a resistance point right there. The stochastics is crossing with a buy signal. The CCI crossed with a buy signal. Again, it's on lower volume, so be very careful. Now, that's going to bring me to the VIX. For the most part, the VIX is inversely related to the S&P. We rallied pretty strong yesterday on the VIX. In fact, we gapped up intraday, came back down, filled the gap, and now the VIX is showing another red candle. Now, I'm not going to change this longer-term forecast line. My upside target up until March 24th is that the VIX will go up to 41.88. Now, for next week, I'm just going to draw some crayon lines here with my drawing tool. I think we could go down, test that moving average, and then start to move back on track to head to that ultimate target of 41.88. So I'm not going to change my trend line, my forecast line on that. I'm just going to draw those arrows for you so you can reference that. All right, so again, why do I think it's going to drop a little bit lower? Down below, see, we got a cross in the stochastics, cross in the CCI, so we're probably going to go lower, which in turn supports the idea of a short-term rally in the SPY. Now, if we look at the diamonds, this is, again, another interesting one where we hit the gap. I was being conservative last week when I said 337.71. So now that target has been hit. I'm going to erase that, and I'm going to do pretty much the same thing with the forecast. I think we could rally up. I don't know if we're going to hit that moving average, but I think we have a good shot of hitting this roll reversal. You see back here it was support. Once support is broken, like we see here, it turns into resistance, and I think that resistance will hold. If this resistance doesn't hold, then I think that moving average will hold as resistance. So be really careful of any short-term long positions that you have. Again, the stochastics is crossing with a buy signal. The CCI crossed over that green line, which is the minus 100 line. That is a buy signal. But even though I think we can go higher, look down below. We got a gap right there. We gapped up today on lower volume. All right, so that's the diamonds, going with upside targets for early next week. Now, if we look at the Qs, ticker symbol QQQ, this is the tech sector. I'm going to talk a little bit more about this as well. We hit that target, absolutely. Last week's target right there was 334.97. I know a lot of you on the YouTube channel there are adding your comments, making money with these alerts. But again, be careful. If you're short anything, you might want to cover for the short term and then reestablish any new short positions once we start moving up to that moving average. And I think that's what we'll see for the Qs as well. So I'm going to draw that line just like that up to maybe up here to this resistance right there, and then we'll have to see whether or not we pull back on lower volume. So I'm going to erase that resistance there. I'm going to erase this support level here and just leave it at that. Now, briefly, let me just talk about this with you. While the markets had gone up and the Dow up over 830 points, we did so on lighter volume. But notice the 52-week high-low list here. The New York Stock Exchange had 44 new 52-week highs, but look at that, we had 81 52-week lows. So over 1.5 to 1 ratio still to the downside on an 800-point rally. What does that tell you? The breadth of the market is still very weak. I would feel comfortable taking long position if we saw new 52-week highs, but that's not happening. And if you look at the NASDAQ here, 54, right there, I'll magnify that, 54 new 52-week highs, but look at the downside, look at this, 152 new 52-week lows. So we have just about 2 to 1 ratio showing a negative breadth of the market there on NASDAQ. And again, I'm going to put the link to this Wall Street Journal dynamic report in the description box. In fact, I'm just going to keep it there each and every week so you could use it as a reference tool. Okay. So again, if the NASDAQ is still showing 2 to 1 to the downside, and we're seeing the breadth of the market being negative on lower volume here on this little rally, I'm not expecting great things for the NASDAQ, because if you look back here, we have a lower high here, another lower high, followed by what? What could be another lower high right there. There's the big question mark for you. So the name of the game is still all about risk management. If you'd like to learn more about what I'm doing with the trade alerts and my coaching, just contact marketrebellion.com. One of the reps there will be more than happy to help you. I love doing what I do here and helping you this way. I hope you are enjoying these reports. Please make sure you like, share, and subscribe. By doing that, you're actually helping us reach those algorithms that get these reports out. And the more people we could help, the better they will be with risk management and forecasting on their own. So that's it for this week. Have a good weekend, and we'll talk to you next week. So long.